Welcome to the A Minute to Midnight Show, folks, and this is Tony coming to you from New Zealand. Today on the show I have the return of Lynette Zang, and I have to say, as I was recording this, I was thinking that this is a really important interview. Please take note and actually pray about it, even what to do, but do something, because I think perhaps time to do something while the window is closing, and so now is the time to actually make some decisions and have a listen to Lynette's advice, because I think it's pretty sound. Want to offer a very warm welcome to Lynette Zang, back on the A Minute to Midnight Show, and you've been on a few times now, Lynette, and always our listeners really get a lot out of the shows that you do. So I'm very happy to have you back today.
Well, I am very happy to be of service, Tony, and I'm happy to be back today too. I mean, that is I do always try and bring value.
And we all learn a lot, I think, out of the shows that you do. So you're a wealth of knowledge. And I've got actually open next to me my iPad, and it's not the end of the day yet, but I'm looking at the Dow Jones, and I see today it's already looking like it's going to close down pretty big. It's around about 600 odd points down at the moment. Are we actually seeing, a correction, or do you think this may be the beginning of an actual collapse?
I think this could very well be the beginning of an actual collapse, because we've had too many technical indicators that are violated, and they didn't just happen today. But, the only thing that's been supporting the markets, according to CNBC and other powers that be, are the stock buybacks. And at the same time, over the years, and especially since 2008, we've been experiencing a shrinking buyer base. So there just aren't as many different pools of buyers to support the market. So I think what originally started during earnings seasons, where corporations cannot buy back their stock until 2 days after they've announced their earnings. And so that's what I thought was the original correction that the market started to exhibit, was because the main source of buyer simply couldn't buy yet, but that once that was over, then they would go into the markets, the corporations would go into the markets in droves to support it. And so it violated some key technical levels before, but the buyers just have not materialized. So when you see the market down 600 points, that's really more about a lack of buyer than an increase of selling. Imagine what's going to happen to people when they open up their statements and they see what's happening and they choose to start to sell. So I at first I just thought this was just a temporary correction. I'm honestly not so sure that that's the case.
And we've been seeing the prices of precious metals going down as well, or staying around, and I always, I've always expected that to happen ahead of a crash, okay? I mean, I've never been one of these people that have, the price of precious metals, gold will be $2,000 by the end of 2016, 2017, 2018, all the gold bulls, they pump this stuff up. Well, to me, it's always been, it's going to crash. But then after the collapse, that's when it's going to have its real heyday. When things start collapsing after a certain point, it'll go up, but not ahead of it. That's how I've seen things, and that's what's kind of happening.
Actually, a rising gold price is an indication of a failing currency. And so when people think about gold and silver and the price going up or going down or doing this or that, what you're actually referring to and thinking about is a derivative, a gold derivative. And the thing about the shrinking base of buyer in the fiat money products, the opposite is true in the physical gold market. So when you're looking on the television or you're inside of the computer and you're looking at the price of gold, number one, you have to understand that is a Wall Street product that is cheap and easy to manipulate. It costs $1.10, literally $1.10 for central banks to control 100 ounces of physical gold and 500 ounces of physical silver and 500 barrels of physical oil. $1.10. So, and they don't even have to go out and earn that $1.10. They just push a button and create it out of thin air. So those numbers are easy and cheap to manipulate, but they do not reflect the real value of physical gold or physical silver for that matter, which is somewhere north of 9,600 in nominal terms, in terms of dollars right now. But a very significant telling thing. I think you should always look at what the smartest guys in the room on any given topic, what are they doing for themselves? Okay. And what we're seeing, the third quarter report on gold just came out recently. And year over year, central bank buying of gold has jumped 22%, the highest level that it's been since 2015. But what's more significant about that is the fact that there are more and more central banks that are now starting to really accumulate a lot of gold. And they don't give a crap about the price. Heck, they can manipulate it down. So, if you could buy something at, for 10 cents when it's worth $1, and you can make it go to 10 cents.
Yes, exactly.
When you know you're also going to make it go to $1. Hello.
That's exactly my point. That's what I've expected would happen, that they will manipulate the prices down so they can actually get as much of it in the physical at, fire sale rates almost, which is what silver is at least at the moment, really. It's just ridiculously cheap, at least in the paper market anyway.
Exactly. And the other part of it is not just so that they can buy it cheap, because I don't frankly really think central banks care how much they pay for it. That's they push a button and create the money. It's more about discouraging the public from accumulating physical gold and silver, because that's how they can protect themselves from all of the garbage that's out there in the fiat markets, the stocks and the bonds and all these new products, the ETFs and all that stuff. Those are Wall Street products that are designed, they get fees for them. But if there are underlying assets, like in JP Morgan and the silver case, JP Morgan controls both sides of that market. They're sitting on the largest physical silver hoard in history, more than the Hunt brothers in the 80s, more than Warren Buffett in the 90s. And on the other side of that equation, they also control the derivative silver market. So JP Morgan controls the visible silver market that you see for their benefit. Why are they sitting on so much silver? They also have the largest short position, meaning a lot of silver that they sell never will exist, because in the physical market, there's a finite amount. I don't care how much that is. There's still a finite amount. In the fiat market, it's unlimited.
Yeah, well, that's right. They can keep creating it. And it's interesting, too, I haven't actually read the article, but I see on my iPad there, it says, cash will be king again as the stock market slides, according to Goldman Sachs. And it's these kind of big outfits like Goldman Sachs that have been calling for the end of cash, Right. So, it's hypocritical.
Well, I think what they're probably really referring to, because they don't want you to take the cash out of the system either.
No.
Because but I think they're talking about, maybe like in this country, dollars, or the New Zealand dollar, in New Zealand, that they want it to stay in their accounts so that you can, at least at this moment, preserve your principal, because the markets are imploding.
Yeah.
Right? So I think that's what they're referring to, because as long as it's inside the system, then they get to use your equity. So good thing that there's cash. They'd rather you be sitting on cash than a massively declining stock market, maybe. because they get to use your equity and create derivatives and do all sorts of things with it. So I think they're more referring to the currency to hold the principal, because they do not want you taking it out of the system.
No, and that's very difficult, of course, if you try and take large amounts out, or if you try and put it into a cryptocurrency in a large amount, a lot of the banks won't let you actually do it. So, not that I'm into the crypto market at all, but just actually, do you think the private cryptos will all be doomed when this crash happens? Is the government's going to control all of it?
Yeah. I mean, there is a move toward that right now. Now the regulations are starting, and of course, we see Bitcoin below 5,000 an ounce. An ounce. What am I talking about? Bitcoin below. The algorithm.
Yeah.
The computer generated algorithm below 5,000 when it was above 20,000 a year ago.
Yeah.
But whether it's going up or it's going down, it still gets eyes on it, on the topic. Right? Which is really what they want, because they want us to develop a level of comfort with it. But I never felt that a central bank would be willing to give up control of their monopoly, which is money.
Exactly, which actually leads me to another point. A lot of people think that the US government controls the Federal Reserve, whereas in fact, I think really what it is there's a bunch of important, in their own minds, powerful people that control the central banks, and the central banks actually control the government rather than the other way around. What are your thoughts on that?
Well, I would agree with that, frankly, 100%, because it happened in stages. So, for example, in 1933, when they took the gold, the ability of the public to convert their dollars back into gold and take the gold out of the financial system, that was the first step of it. But in 71, that's when the central banks got the full control. And yes, I think they are definitely the ones running this show, because once Nixon disallowed governments from converting their dollars into gold, then it's been the central banks in control ever since. And I think the government is there primarily to legalize the theft. Because I see, well, right. And if you stop and you look at the laws, and especially the way the new laws that they put in place are titled, whatever they say that it's supposed to protect the public, it's just the opposite. And then when you read the body of the law, then you get a really good sense of exactly who that law is protecting, and it's not you or me.
No, that's true. I think back in 2013, now I'm thinking I made a graphic, and it was commemorating 100 years of swindling the Federal Reserve. Which
I mean, you stop and think about it. By design, the central banks know they know more than two things, but two key things. Number one, they know that people don't understand inflation. And inflation is not a monetary phenomenon. You would have normal, everything moves in waves. So they knew that they could rob the people over time if they held the inflation at a reasonable level. That's why everybody's got that 2% target. Then we've been taught to accept it. But the other piece, so they know nobody understands inflation, but they also know that people marry the legal money of the state. So when we had the gold dollar and it was backed by gold in the US, okay, people got comfortable holding those pieces of paper and that representing gold. But once we went to the fiat dollar, they started to remove the gold from the currency. And by design, the currency is devalued through inflation. In this country, we're now well below 4 cents officially. This is according to the Federal Reserve. Officially well below 4 cents out of the original dollar's worth of purchasing power. And yet call it a strong dollar. Well, that's relative to other currencies. But in terms of value, no. And that the loss of value is hidden because of that nominal confusion. You had a $20 bill 20 years ago. You've got a $20 bill today. For you, you just think you've got a $20 bill. But what that $20 bill would buy, its value is vastly different today than it was 20 years ago, or heck, even a year ago. By design. So yes, I agree with you 100%. It is the central banks that are ruling all of this.
So what's actually happening to the US dollar at the moment?
Well, at the moment, I think the US dollar is kind of between a rock and a hard place and likely to be shot out of a cannon in the not too distant future. And what I mean by that is that a lot of emerging markets, China particularly, but a lot of emerging markets have issued debt in terms of dollars when the dollar was weaker against their currency. The dollar, having strengthened, though, is pushing a lot of those corporations into default, which is really bad because even though they don't earn dollars, they still have to pay it out in dollars. So part of the problem with the dollar is that, and it's getting strong simply because in this country we're raising interest rates so we can get in that quest for yield. Globally, people can get more yield on U.S. debt, U.S. government debt, or what have you. So that's why I say we're between a rock and a hard place. The path that our Fed Governor Powell is on by raising rates basically makes the world want to hold dollars and dollar-denominated assets because they're getting paid more to do so. But on the flip side of that coin, all of the debt, the foreign debt that's been issued in countries that are issuing debt in terms of dollars, but they don't earn dollars, means that it's more expensive to pay that debt off. So I think the US dollar is between a rock and a hard place. And when you put on top of that piece the shift in quote unquote world reserve currency status that is also going on as more and more countries are creating what they call bilateral trade agreements, so bypassing the dollar completely. And that's been going on really since 2005, but it became a lot more visible after 2008. That means that actually fewer and fewer governments want to or are holding dollars in their reserves. So that makes the dollar's value weaker. I know it's really, complicated in many ways, but yeah, we're between a rock and a hard place. This is why the whole system has to reset. And it's not just the US, but as the world reserve currency, it's going to impact everybody in the world. There's nobody that's going to be immune from this. Although I think we'll feel it the most here.
Probably you've got the furthest to fall in a sense. But then countries like us in New Zealand, we've had a pretty cruisy life as well. So we're certainly going to be, affected by it. So what about oil? What's happening there at the moment? Because that seems to be dropping.
Oh, yeah, like a stone. And, talking about oil, oil is in everything. But again, it's being treated like a trade. So some of the things that we have going on with oil is the cost to ship goods around the world. So the Baltic Dry Index, which registers the shipping freight around the world, has been also dropping like a stone along with the oil, indicating a global slowdown. So plus Saudi Arabia has really been transitioning away from its dependence on the US and creating a lot more agreements with China. and China now has the petro yuan versus the petrodollar in the US. So that relationship between the Saudis and the US is also breaking down. And we've certainly seen it in a really large way just recently when that reporter was killed, the Saudi Arabian reporter was killed in Turkey.
Yes, of course, he was almost heroized, but he was a pretty nasty character himself, actually. Not a nice man, but they've used that, as a, well, I don't know, just to create something anyway out of it, as if he was somebody importantly special or, doing some good, but really he wasn't a good fellow at all. But anyway, that's kind of digressing a bit. But
but I think that was that incident definitely seems to have been used on a political basis.
Yeah.
Because, hey, we were trying to sue the Saudis for what happened in 9/11, and I believe that was blocked. But all of a sudden, you have a reporter killed, and now that's a big deal. So there is a reason.
Yeah.
Okay, there's a method to all madness.
Yeah. Okay. Now, what about the housing market? And I see that the U.S. total household debt has reached an all-time high of $13.5 trillion. In the third quarter of this year. So what's happening, sort of in the housing market and the debt market and for people in the US?
Well, quite honestly, the real estate market has already topped out, and I reported on some stress earlier where I saw the bottom part of the market, so the lowest end of the market, was deteriorating, as well as the highest end of the market, which is really where the most expensive part of the market is, where the smartest money lives in this area. So when you see that level starting to deteriorate, the rest of it is probably not that far behind. So I'm seeing some similar signs like I saw in August of 2005. It's not good. The real estate market, which never really bottomed, in all of these markets, what we've seen is what's called a V-shaped recovery, which means it's a sign of manipulation, not building a base. It's just rapid down, rapid up. And the real estate market is not in a very good place in the U.S. right now, or I don't think anywhere in the world, frankly. I think this is a global issue with real estate.
So, can you explain the methodology or that V-shaped recovery?
Well, okay, sure. And a V-shaped recovery. I mean, you can take your fingers, you can take your hands, you can see what a V-shape looks like. But like when the markets recently sold off the beginning of October, and then they hit a bottom. Okay, now what I always look for to know that there is an accumulation pattern, the smart money is quietly buying. It kind of looks like the bottom of a cup. So it happens over time where there'll be a lot of that asset or that instrument purchased at that lower level. Then it starts to move up. And that can take years. The longer it takes, the more powerful a base you have. But if something drops rapidly and then rises rapidly, basically creating a V shape, then that is not a very strong recovery. People are more relieved because it went up faster, and that's actually what we got when we hit that bottom in October, and then all of a sudden there was this V. It happened in 2008. It happened with all of the assets because the central banks and governments had targeted these for quote unquote reflation. But the problem is it's not a very strong foundation because it didn't really go into the strongest hands that are accumulating to hold. They have bought it to push the price up, right? The stock buybacks and the different ways that they can do that through derivatives. But that also means that is very short-term fast money in, fast. And that if it's fast money in, guess what? It can also be fast money out. that's more about a trade rather or a short-term support to get people to feel comfortable than it is about a strong foundation that can withstand, a crisis, for example. So whether it's, what happened in 2008 to 2009 was the bottom of the V when they started the quantitative easing, that's really what pushed those markets up. But that's not a very strong foundation. And we had a little V here in October and November. So that's what I mean. If it looks like a V,
Yeah.
that's not accumulation, that's a trade.
Yep. Okay, now what about sort of looking at, say, a country like Japan, where you've got the massive discrepancy between the GDP and, and everything. Could that, what impact would Japan have, on the rest of the world? What's going on there? Is it going to have a big impact on everyone else, or if things start really collapsing there?
The interesting thing about Japan is it's now had 3 lost decades. They never recovered from the 90s. And so they're really like a poster child of what a desperate government and a desperate central bank will do. Because they own it's something, don't hold me to this, but I think I'm going to be pretty close. 90% of all the ETFs on their markets, they are their stock market. They are their own bond market. So, what would cause an implosion is really what's the value of any of that stuff? It's like pushing on a string. No matter how much more money they push into the system, the stock market there, that can support that for a minute or two, but it's losing its strength. It has no impact. They haven't really, quote unquote, stimulated their economy in 3 decades. So I think globally, I really want to do a piece. I just haven't quite done it yet, but I really want to do a piece on what options central banks are going to have or likely to have during this next crisis. Because I did just before the crash. I've got to do one, at the crash and then after the crash. But I think that a lot of what other central bankers will do is what Japan has been doing, and it didn't work for them. It's not going to work for anybody else, but that's because they're all out of tools. They're out of tools.
Yeah, okay. Now, another thing you mentioned to me just briefly off air was the Asia Pacific Economic Cooperation Summit, and you said that there was no agreement there or something. Can you explain that?
Well, that just happened this past weekend, where you had the U.S. join the Asia Pacific region. And typically, and I think this started in 89. So for the very, very first time, usually at the end of this conference or at the end of the summit, they all the countries come out with a joint statement. But the U.S. and China could not agree on that statement. China was not happy because the U.S. wanted them to commit to basically not stealing an intellectual property. They didn't name China specifically, but everybody knew what they were talking about. And so that's the first time that we have not had a joint statement after a summit. And it is absolutely an indication of a ratcheting up of the trade wars, which everybody is impacted by. Whether it's because of all of the taxes and tariffs pushing prices higher, which can also, hide some of the planned inflation. But basically this article that I was reading said, the China and U.S. could not agree, and everybody else is taking cover from the fallout. So you've got your largest economy, the U.S., and the second largest economy, China, and you've got a trade war that is now escalating. And it looks like it's going to be, I think this could certainly push This could be a lot of why we're seeing a breakdown in the market. This could be very well it. I'm not sure yet, but it sure looks like it. Technically, it's horrible. The erosion is really bad.
Does anybody win in these trade wars, really? Or is it just somebody loses worse than the other one?
Well, I guess it depends on where on the food chain you're looking, because quite honestly, somebody is going to be the winner, but it won't be the public. The public will definitely be the losers, but what all of this is still about is a transfer of power and wealth. And I think that's really what's happening in here, is that the US has really enjoyed a major position of global power, primarily since the 40s when we became the world reserve currency. But now we have China that is threatening that dominance, although economically everybody's in horrible condition. But I think that part of what we're experiencing is a power shift. And for most, it will be nasty. But no, I'm pretty sure that somewhere up the food chain, there is massive benefit to it where it wouldn't happen.
So a massive power shift. Is the power shift really heading east, like some people say, or is the power shift just basically heading to the IMF and the BIS, the Bank of International Settlements, and the World Bank, and these people? Is that where the power is really going?
Well, yeah, absolutely. I mean, ultimately, if everything is valued in terms of SDRs, then the IMF is the unelected regulatory body that controls all of that. And if they can establish a way for the title of all assets to be held in SDRs, then they're the king of the hill. So, yeah, I definitely think, but it could even be higher than that. However, I can't prove that.
Yeah.
So I can't really go there, but 100%. The IMF had a minimum level of power before the crisis. They have a lot more power now.
I mean,
a lot more power.
Yeah, I think ultimately there's a few families that control the world. The Habsburgs and the Rothschilds and various others, right. the royal family in Britain and so on. And so the power is going ultimately to a few that control the IMF and the World Bank and all of these other things. That's what I, personally believe anyway.
Right. And stop and think about it, because it's really, it is the power, but then also the wealth transfers.
Yeah, well, that's it.
Right?
Yeah.
So, and even looking at these markets, I was listening to CNBC this morning, and they said something like $1 trillion in wealth has been lost, over this last week, or, whatever that number was. But I want you to think about that for a minute, because what we've seen and what I've been seeing is the insiders. So the CEOs, the CFOs, the boards of directors, the guys at the very top of these corporations, they have been selling out in droves. So maybe the stock market's down 600 points, but they captured that wealth when it was 600 points higher. You may still be sitting at it. You may have lost all that wealth. But the insiders didn't, the guys that understand what's really happening in their corporations. And if things were really so awesome, why in the world would you sell the stock? You wouldn't. You'd hold it.
Absolutely, yeah. And of course, they're in the know, aren't they? They know what's happening. Because, ultimately they control what's happening, manipulate it, control it, and then they make the moves based on, that very fact. So it's not just some random events that drive things lower and higher and whatnot. And you mentioned...
Oh, yes. Oh, I'm sorry.
No, carry on.
Well, yep. I was just going to say that when you stop and you think about it, the fact that they're selling and then they're going to cash, or, dare I say it, physical gold or silver that is severely undervalued.
Yeah.
So they're selling something that is overvalued and they're converting it into something that is undervalued. That's what we should all be doing. And if you're sitting in any fiat money at all, that's the most value. This moment, this very second, is when it has its highest level of purchasing power that it will in the rest of its life, whether it's country to country or wherever. It doesn't matter. It just keeps buying less and less and less. So personally, I convert those overvalued dollars into physical gold and silver. And particularly, remember, it's easy to control it, but how do they do a reset? There's only one way. It's not like they got 1,000 different choices. They revalue that fiat money against physical gold. And that's when gold will express to somewhere near its true value. We've seen it in Venezuela this year. It went up over 2,200 times when they did their reset, but it's gone up a whole lot more since then. It keeps going because they haven't finished burning off the overvalued circumstances. That's why you see central banks year over year this year buying more physical gold. I think it was 22% year over year, with more central banks participating. There's a reason why they're doing it. They don't want you to do it, but I think you should do what they do.
Yeah, and I'm wondering whether Venezuela is kind of like a test case. Let's do this and see how it pans out. So Venezuela's like the I can't even think of the word, but they're the guinea pig at the moment.
Right.
In a sense.
Well, and a lot of countries are, but yeah. I mean, their currency, their economy is collapsing. You've got 90% of the population now in abject poverty. That includes the middle class. But notice I did not say 100%.
No.
So that's where all the wealth in Venezuela is transferring, are to those people that hold their purchasing power value so they can buy those other assets when they are dirt cheap. So that's where you see that accumulation pattern that looks like a cup. Okay. That's what I look for to know that we're at the beginning of a new long-term trend.
And I think, everybody really, most people anyway, should be able to afford at least a little bit of silver at this point. It's so cheap.
Right.
Even if it's only a little bit, because some people there are a lot of people that don't have much money and they struggle, but I'm sure, just think about things you don't need and maybe go, okay, I'll just buy a little bit of physical silver. If you can't afford gold, because a lot of people can't. It may be cheap compared to what it should be, but it's still out of reach of many people. But really, silver at $14 something, though in the physical, you don't get it that cheap. Certainly here in New Zealand, we're not getting it anywhere near that cheap. But it's still, compared to what I think at some point it's going to be, it's cheap as chips, really.
Oh, it's ridiculous. And keep in mind, too, even with gold, you don't have to buy a whole ounce.
Yeah.
You can buy a little teeny piece. Plus, everybody needs to keep in mind that gold and silver as the primary and secondary currency metals are all money at their base. So it doesn't even matter what form it's in. If you have your Aunt Bessie's sterling silver, or you have a sterling silver bracelet, that's 92.5% pure. And I can tell you that I have picked up an awful lot of that kind of stuff when I would go to like yard sales and garage sales. It's not so easy anymore.
No.
Maybe you're in different places. But yeah, you just look for the marking. It's pretty easy to accumulate.
Yeah. I love antiques and collectibles, like Victorian and Edwardian stuff and that sort of thing. That's something I've been interested in for years. And there are some things in silver, like sterling silver, that just fetch too much money because of whatever they're collectible. But things like candlesticks, you can find sometimes sterling silver, maybe Edwardian sterling silver candlesticks fairly cheap. Just look for that lion on it, so that you know it's sterling silver.
Exactly. And, something else, since you're an antiquer, if you, they probably have, malls where you have like lots of dealers in at
Yeah.
one place. Well, when they're out buying, they may get like broken candlesticks. So to them, it's junk.
Yeah.
Now they can sell it to a smelter, but they're not going to get spot if they sell it to a smelter. So even if you have $20, you can go into an antique mall, see if there's any dealers around and see if they have any scrap,
Yeah.
broken stuff, right? And offer to pay them spot by weight. Offer them, that's going to be more than they're going to get from a smelter. And it's a really cheap way to do it.
Yep. So these are all things that people can think about. Now, just quickly going back to the reset, which is a word we've heard bandied around now for several years, and everyone's going, well, I suppose, when is this going to happen? One question that somebody asked me who actually does some moderating on our A Minute to Midnight Facebook group, that's Fred, and Fred said, when this reset happens and, when there's a new currency comes in eventually, because that's where it's going to head, is debt going to be forgiven, or what do you think is going to happen to people's debt?
Okay, well, there's a few things in there. Number one, the reset has been happening since 2008. So we are already in process. This is not something that's going to happen in the future. It will just become visible in the future.
Right.
So that's number one. Number two, historically, this is a way for governments to basically default on their debt because the debts are repaid with currencies that have no value.
Mm-hmm.
Right?
Yeah.
Which is part of the strategy that I developed and that we use here at ITM Trading, is exactly the same strategy as governments. Historically, personal debts do not get erased. And people usually are not prepared for the reset. So therefore, they will never have enough nominal currencies to pay off their debts. Now, variable rate debts, once interest rates start to really fly, if you have variable rate debt like credit card debt, you are never getting out of debt, no matter how hard you try and pay that off, because interest rates rise so rapidly that you just can't. It's not possible. Your wages don't keep pace with that. Fixed rate debt, however, is where a huge opportunity lies. Because number one, okay, so let's just make this simple. And let's say that you owe $100,000 whatever on your mortgage balance at a fixed rate. Well, because that is a fixed rate contract, they can't just boom, change it like that, like they can with variable rate debt like credit cards. So there's this window of opportunity during, at that point, also understand that governments and central banks need gold somewhere near their fundamental value to accomplish that, right? So there's this little window of opportunity that when you get the letter from the bank saying they're going to reset your mortgage, that you can liquidate that gold just like the government is doing and paying off that debt with currency that has no value. But since most people will not be able to do that, nor will they be able to pay the new reset principal, reset payments, there's an awful lot of real estate, as example, that will be coming on the market. So going back to Japan, when that happened in the early 90s, you had commercial real estate drop 95%.
Wow. That's huge.
But look at how much building's been going on.
Yeah.
Right? And look at all the leverage and the debt in the system. And really most of that has been securitized. In other words, turned into Wall Street product and sold to you. So it isn't even that the banks are taking on that risk. They've transferred that risk to you. They're just about ready to let that go. I do think, as I've been looking at this risk transfer, that it does look to me like enough risk has been transferred to allow the system to collapse. But that's really what happens with debt. No variable rate debt. You do not want any variable rate debt going into this, because it will bury you. It will not be forgiven. I mean, obviously it's not something within my control, but history says will not be forgiven. The fixed rate debt won't be forgiven either, but there is a strategy by, again, the gold is the best for that. I'm not saying you couldn't do it with silver. It's just really bulky and unwieldy and hard to do it with. It's easier to do it with gold, where you pay off your fixed rate debt when you've got, the price of gold going up to its fundamental value from wherever it is, 1230 to 9,600 or a million. I mean, I don't know where it's going to be when they do the reset, or the visible part of the reset, but you pay that off just like that. So if you don't have it, then I don't know what you'd have to protect yourself with.
Yeah, that's a very good point. So yeah, people should really look at that now while there is still opportunity. I totally agree. So what is your website again? I'm sure most of our listeners will know, but you better give them, what your website is and things so they can find it if they don't.
Okay.
Yeah.
Well, it's itmtrading.com. And then we have the YouTube channel. So I do these research reports every week, and also Q&A, answer a lot of questions. And that's YouTube.com/ITM Trading, or you can probably Google my name, Lynette Zang, and it would probably also come up.
Excellent. Now, have you got any last sort of thoughts that you think that we should get across to the listeners?
Well, I think the listeners really need to understand that's what's happening in all of the global markets is about that shrinking base of buyer. And, it is typically the public that stays in. We're referred to as sticky, because once we make a choice to buy a stock or to put money in the bank or do something like that, the individual kind of
that just broke up. Sorry. Can you repeat that? That's the first time we've had a bit of a breakup.
Okay. And what I was saying is, I think that a really huge key for people to understand is that really what's happening in the global markets are more about buyers not showing up. It is a shrinking base of buyer, because people that are holding these stocks or bonds or whatever, they think they can sell them whenever they want. But the reality is they can only sell them and all the mechanisms are in place to simply push a button and bam, halt trading. So this should be a wake-up call to everybody on what the truth is. Look at the volume. You're going to see the markets are not going down 600 points because people have been rushing to sell. That is what lies in our future. And if people wait for that, they're not getting out. Period. I'm sorry, because I'm going to put my neck right on the line with this. I'm telling you, from the tip of my head to the bottom of my toes, if people do not heed this warning that there are no buyers on the other side of these markets, their wealth will be locked in the system, and it looks like this could be the big breakdown. This does not look good technically. Nobody's saying that this looks good technically. They may tell you to buy, Wall Street cheerleaders may tell you to buy, but they also keep saying, but I don't think the bottom is in yet. Well, let me tell you, the violations that I'm seeing in these markets, and also they're right, the bottom is not in yet. Where is that bottom? I'm going to tell you, it's going to be halts, trading halts. They're going to lock this system down so fast that even if you think there might be a buyer on the other side, not getting out. And I would say that would be like the biggest thing, the biggest takeaway to understand is that that's what you're seeing right now. Take heed. And if you're in that system, get it out.
And that brings me actually to another thought, which is if people think having cash in the bank is going to save them, once again, all of the countries like America and New Zealand and other countries in 2013, 12, 13, 14 put in, well, in New Zealand, we've got what's called the open bank resolution, which allows the banks, in the event of a bank beginning to fail, you with money in the bank are an unsecured creditor, and they take your money to bail the bank out, and the shareholders of the bank are the last ones to be affected. So basically they can give your bank account a massive haircut, like what happened in Cyprus.
Exactly. And that's not the only place that it happened, and that's what they're setting up for. In fact, I just did a research report that showed how much more the banks are counting on deposits for funding. So the normal sources that they used to use prior to the crisis, which were, the interbanks and all of these that's gone. It's gone. A big key part of the funding sources are your deposits. They will be bailed in. They will be bailed in.
So that's another reason to put at least a portion of what you have into other things other than the system, right, outside of the system.
But it kind of goes back, Tony, to what you were talking about with Goldman Sachs saying cash is king. Well, cash out of the system initially will definitely be king, because people will recognize that even before they really understand how rapidly they're losing value. So you definitely need, along with your gold and silver, some cash in small denominations, because they will make the larger denominations illegal. But cash out of the bank, in with your barterable gold and silver, your bracelets, to whatever you're going to use for that. It's pretty handy. If you have a chain, you can cut little pieces too. There's all different ways to do it, but that's what you need. You need money. You need it out of the system. And with a chunk of it being actually real money, like physical gold and silver, that's your safest. That is the ultimate safe haven asset. Period. End of discussion.
And of course, as well as that, people should be prepared with things like food and water and all of that, which you'd also deal with. And we haven't got time today, but people can listen to our other shows on our website and on yours and things.
Right.
Get prepared to survive a period of time if things do shut down. You don't want to be trying to go to a supermarket to join a queue that is emptying out the supermarket in 2 hours.
Exactly. That's not, so you are right. It isn't just gold and silver. You can't eat gold and silver, although it is a universally barterable tool. But it's food, water, energy, security, barterability, wealth preservation. Somebody pointed out that I never say shelter, but we got to have shelter.
Yeah.
So I got to add that. And community. Get to know your neighbors, get to know your community so that you can come together and help people.
Absolutely. So this has been another fantastic show. So much in it. And I think we will all hopefully learn more. People better learn something out of this, because if they don't, they're in trouble, I think.
Exactly.
Yeah. So thank you, Lynette. And it's itmtrading again, .com, itmtrading.com. Yep. That's where you can find Lynette website. And so thank you so much again. And definitely have to come back as we watch this unfold in the near future. Awesome.
I'm happy to do that. It's always a pleasure to do an interview with you. You're very, very bright and articulate and interesting and fun.
And I say the same with you, and I know our listeners love
Thank
it,
you.
because in fact, I asked this morning Fred from our Facebook moderating team, and he said, "Oh, great, Lynette's awesome," and that's where he said, ask these couple of questions, and that's a general consensus we have from, our knowledgeable listeners. So thank you again.
I'm very honored. Thank you.
Excellent.
Happy to be of service.
Awesome. Thank you. Folks, you can find all of our shows at our website, aminutetomidnight.com, and also on YouTube and iTunes as well. And remember, A Minute to Midnight, Midnight is spelled M-I-D-N-I-T-E rather than the regular way of spelling it. And we do run A Minute to Midnight by donations. If you can help us out that way, you can donate on our website. It's much appreciated because, quite frankly, we can't keep this running without donations, and I want to say thank you to the people that do help us out. It is hugely appreciated. And all the music in the shows is written and played and recorded by me, and you can find free music if you want to download on our website too. We also have a Facebook group, an A Minute to Midnight Facebook group, and there is a community forum on the A Minute to Midnight website, which people are welcome to join and get themselves involved in. So I think that's about it for this show. I want to say thank you for listening, and we will be back with another episode of A Minute to Midnight in a few days' time, and the next show is another really good one. I'm sure you will get a lot out of that one too. So this is Tony saying God bless and have a great week, and we'll catch you again soon.